Did you know that you can invest in nearly every corner of the market with just 5 ETFs? Today I'm going to show you how. What's up guys, I'm Michael T. Ragland. In this video we're diving deep into the top 5 ETFs that are going to provide you with exposure to all major market sectors of the economy to make sure your investment portfolio is as diverse as the market itself. But before we dive into it, I'm sure a lot of you are thinking, what the hell is an ETF? I love when I talk to people and they're like, EFTs, ETFs, ETF, Exchange Traded Fund. Very simple. This is a basket of stocks so you can spread the love around. But let's say that I really was bullish on Apple and Tesla and Microsoft and Nvidia and some of the other tech companies. I could easily just invest in an ETF that holds a basket of them and get exposure across all of those tech stocks without buying individual stocks. And that's gonna actually help me to lower my risk because I'm spreading the love around. The first one we're actually gonna jump into is what I actually use my personal savings account, which is VOO, which is just the S&P 500, right? It tracks all of the top companies in the S&P 500 and it's weighted amongst them. But one thing I'm gonna show you, when you look at any ETF, there's a couple things to look at. You always wanna start with the summary of the actual ETF itself. And if I dive in, I can see it's an indexing investment approach where they look at the top 500 companies and then change the weighting depending on how the market is going. And if you look at the screen, you can see top 10 holdings right now: Microsoft, Apple, Nvidia, Amazon, so on and so forth. Most of those are tech companies. And if I look to the right and look at the weightings, that lets me know that technology is having a run right now. And that's, for me, I don't think it's sustainable because of interest rates staying higher for longer, and it's built on a bunch of hopium and people hoping that rates are gonna go up, but not being sure, because what you gotta remember is that technology is gonna be consumer discretionary. So what that means is that we buy that stuff when we have extra money. You'll see that when we dive a little bit deeper into some of these numbers when we get to the charts. But this is just super important for you guys to understand how these ETFs work. Super simple, right? Just a basket of different stocks. This particular one, VOO, is just that S&P 500 basket of those top 500 companies in the US economy. One of the first tabs I come to on everything is going to be the performance tab. So I'm always jumping straight over to the annual total return. I'm going to look at, how much was it? 26.32. So just imagine if you're using that as your savings account like I do, you'd be up 26.32% if you're doing it this year. Like I remember getting my dad in on the S&P because he's investing in all these like pharmaceuticals. And if this one gets FDA approved, it's going to go to the moon. And all of his friends from like the golf club were telling him to chase this stuff. If you're brand new and you don't really have the time or care to dive in as deep as we do on this channel, just invest in these ETFs. Buy the whole freaking market with VOO. Use it as your savings account if you have that risk tolerance, and you'll be fine. You can be up 26.32%. Keeping in mind that most savings account get you what, 4 or 5% right now. And then one thing I want to point out, though, I know a lot of you are staring at the red on this chart, right? Our brains have a like bias towards negative stuff. You're like, oh my God, they were 18.19% down in 2022. Yeah, duh. We all were down. It was a very bad for tech. And remember, tech is consumer discretionary. It was a very bad time for the market because that's when these interest rate hikes really started kicking the steam, and ain't none of us have no money. And everybody was like, oh my God, I don't know if I'm gonna be able to afford my mortgage. Yes, you had a down period then, but look at this in aggregate. 2 down periods and everything else was up. So if you've been investing in VO as long as me, add all that percentage together. I'll wait. And you'll see how much you're up just on being smart and putting a little bit from your paycheck, whatever you can afford, into your little savings account, right? Or into the total stock market. I'm not a financial advisor. I'm just telling you what's worked for me, but it's something I love to show everybody. If you want to go a little bit deeper, you can say, okay, what are the top holdings in these actual ETFs? We're not going to go as deep on the other ones. I'm just going to give you an overview, but on this one, I just want you to understand the whole landscape. So I'm going to spend a bit more time on it. So if I go to my top 10 holdings here, Microsoft, Apple, Nvidia, Amazon, Meta, Google, like I said before, we know it's because tech is really the highest weighted and best performing for this year currently, right? That's gonna shift, I'm telling you. And then I can see sector weightings, tech 30%, financial services, so on and so forth. If I look down here, so super simple to understand, right? Just a basket of stocks. This one's just a basket of top 500 companies in the US. Can't go wrong. That's why I use it as a savings account. But now let's drill down into individual sectors. So we're gonna look at the financial sector. And I've said it in other videos, but if interest rates stay higher for longer, banks, tend to overperform during that time. There's a bank that made like 10 billion bucks in 1 quarter here in Australia, just off interest rates and some of the financial products they're able to get off during those high interest rates time. And don't bemoan it, don't freak out about it. Try to find a way to get an angle in. So if you look at the actual performance here, and we look at the history of performance, up 12% this year, down 10 last year, 34% there, 1% here. So it's been a mixed bag there as well. But this is just a way that you can smartly shift. So you can't time the market. Nobody will be able to time the market, right? But if you're somebody and you're sitting back, like during this time I was sitting back and I'm like, okay, like I know that those rates are gonna start to creep up, and I actually was wrong here. You're not gonna always be right. I thought I'd get better gains off of investing in the XLF, and I weighted my actual portfolio a little bit more towards this, and I had to rebalance back to other sectors, but that's okay. You just need to understand how this works. I can invest in the top companies in the financial sector based on a hypothesis that I formed from understanding the market, not timing the market, but understanding what type of market we're in, right? If it's a high interest rates, or if there's any other thing that's gonna make banking and insurance really run hot as a catalyst, I can maybe weight a little bit more towards financials. I'm weighted mostly towards VOO, but I want to show you these things because there are options that you can use to get weighted into different sectors and to stay invested without trying to chase like the top stocks in each of these sectors and losing your money left and right. But if we look over here now, I always want to show you the holdings. So if we look at the holdings here, Berkshire Hathaway, that's Warren Buffett's company, by the way, richest man in the world, or always top 5. I don't know where he is. Maybe he's number 3 or something now. JP Morgan Chase, Visa, MasterCard. And one thing I want to point out, just very common sense. When people are buying a lot of stuff on credit, Visa and MasterCard are going to be doing their thing. So I want to be invested in those companies. Like I might grab individual shares if I see something outperforming or know there's a catalyst coming up. Remember, I'm going to talk about this in almost every video, but 3 things that can move stock: news, fundamentals, meaning earnings reports and how they're actually doing, and technical, support, resistance, and other chart patterns can move that, right? One of the most common things that we probably see and that you see all the time is the news moving stuff, or just the overall market sentiment. So if interest rates are high and people buying stuff on credit, I'm gonna look to invest more into some of these financial companies. And VGT is another one of my favorite Vanguard ETFs because this allows me to jump right into the top tech companies here and spread the love around. So 18% Microsoft, 15% Apple, Nvidia 11%, so on and so forth. So I'm not actually chasing the individual stocks. I'm just investing and spreading that actual risk out. And I invest in these things normally. I'm not just buying it like every now and again. I'm dollar cost averaging in to lower that curve, which we'll definitely talk about in later videos. And we can go right back to performance. Remember something here? VGT was down 29%. The whole category was down 37%. And I think VOO itself was 22% because it's spread out, remember? So the more exposure you have to other sectors, the less of that hit you're gonna get when there's an overall downtime in the market. But look at these gains, like 52.65% this year. Like I said, I don't know if that can hold, but I'm loving it. McDonald's, I'm loving it when you look at these things, but this is how hot tech can run. Like it can be volatile, but you can spread it out by investing in a bucket of these top tech companies. There's a lot of them out there. There's Cathie Wood and her ARK Invest, who goes a little bit deeper in innovative stuff. It hasn't been doing as well, but it's another option if you're interested. But I like Vanguard because they keep things safe and they keep fees low. Another great ETF to look at and sector diversify across to is going to be XLI when you want to get into the industrial sector. And if you look at this, GE, CAT, Uber, Union Pacific, Honeywell, RTX, and Boeing. The thing I like about something like XLI is I made a video where I talked about defense stocks and how if we keep having the global unrest, they may run. Well, if you get into industrial, some of these companies actually have defense contracts. You can double dip to get exposure to your GEs, Caterpillars, Ubers, and some of the companies that are building out the world, but also get some exposure as well to defense stocks in something like an XLI. You can see how it's weighted heavily to industrials. And if we jump over to my favorite tab, look at performance, 18% there, -5, 21, 10, 29. So once again, as you can see, it's a lot safer when you actually put all these stocks together in a basket and look at your time horizon from 5 to 10 years and not from 1 to 2 years. You can see how much you can actually gain if you just patiently invest in these sectors and rotate and change your weighting depending on what's happening in the world, right? A very simple strategy. You don't have to be a stock genius to do this stuff. You don't even have to know technicals, fundamentals, or nothing. You just need to know what the sectors are and what they're actually holding. Another sector that I'm always watching is the healthcare sector. You can do that through XLV by diving in and looking at some of these companies, your United Health, your Eli Lilly, Johnson's, your AbbVie, and Pfizer, all these other ones, and try to get in. But one key thing I think about when I think about healthcare, I think about an aging population. Like there are tons of baby boomers and we all love them, but they're getting up there in age and they need that healthcare, right? So they're gonna have to start spending money, and these companies are gonna continue to be profitable as populations age globally. So I always think about that healthcare sector just in the grand scheme of the big picture, not so much in sector rotation, but just understanding the big picture. And then we can look at annual returns here. Only had a 2% dip in 2022, and we probably know that was probably aided by a lot of the vaccines and other investments that we had to do in healthcare due to the stuff that happened in the previous couple of years as well. So remember, I love showing you guys this stuff because people are thinking, oh my God, the market was down 22%, everything was all gloom and doom, but there were other opportunities there if you knew where to look and how to actually weight your portfolio. But since I really like you guys, I'm gonna show you one more. That's something called a real estate investment trust. It's something I love. It allows you to get invested into real estate without owning any doors, right? So real estate investment trust, this is Equinix here, and they're great because they invest in a ton of data centers. I talked about it before in some other videos, but as AI becomes more and more popular, without getting too techie, like you gotta have actual physical buildings to store all these servers and chips and all this other compute power that you need to power your AI. And man, a lot of companies are investing heavily. OpenAI and Microsoft are pouring billions and trillions into data centers and investing. So this is a way to actually invest into data centers. Super cool, right? The real estate of having an actual data center by jumping into something like Equinix. There's other ones out there as well, but one key thing I want everybody to look at here is when we go in and we say, okay, who are the major and institutional holders? So what this means is that don't try to be a genius. Follow smart money or big money, right? So all these other funds we talked about, Vanguard was one that we talked about a lot. Look at this. Vanguard has $8 billion invested into this actual data center REIT, right? Just follow the money. They know that something's going down here, so they took a lot of those funds and shifted and invested that in, and that was reported in 2023. We don't know where they're sitting at right now, but if you look at this, most of the major holders here are gonna be institutions, big money. So if big money's there, I wanna be there too with my little bit of money every now and again, trying to get paid too inside of here. Look at all these mutual funds and huge ones that are actually heavily invested. Like these numbers are so big, I had to pause, kind of actually understand, count the freaking commas so I could get this down. But this is how much big money is going into these real estate investment trusts like Equinix. Like, just because I really like you guys, I'm gonna give you one more. But another one that comes up is Digital Realty Trust, or DLR. That's in here as well. Same type of vibe, like 102.47% held by institutions. Crazy. Once again, Vanguard's put another $6 billion into this. BlackRock's there. All the big money is there looking at these data center real estate investment trust. So I actually gave you guys 7 ways to jump in and get exposure to different markets. If you like this type of stuff, leave me a comment below. And our goal here is to break that generational wealth curse so you can leave more behind for your family when you pass than just debt. Until next time, this is your boy Michael T. Ragland, and I am out. Peace.